Today I'm going to discuss question 21 on how to prepare a statement of cash flow. So this question 21 is at page 171. So you can flip to page 171 to look at this question. Okay, so this question they ask us to prepare a statement of cash flow. So basically they ask you to prepare the whole statement. So before we start, the first thing that I would like to do is to look at the additional information. So the first additional information, they talk about purchase return. Whenever you see the word purchase return, you must know that purchase return will reduce your inventory and it will reduce your accounts payable. Okay, so purchase return will reduce your inventory and accounts payable. Okay, because when you return back the goods, your inventory become lesser. At the same time, you owe people lesser. Next will be land revaluation. Your land was revalued by 3,000, but whenever you revalue your land, there's no cash transaction. There's no cash transaction. Okay, so you don't need to record it in your SOCF. Okay, so a bonus share issue, a share issue was made during the year, and the share issue cost paid is 1,008. So this issuance of shares, we are going to record it in financing activities. So when we are doing our financing activities, we shall include this in. Okay, so normally when I do all this statement of cash flow, I would have a working page as well as a statement page. We shall start with the statement page because you need to prepare the statement first before you can start with the workings. Okay, so for your statement page, they ask you to prepare the whole SOCF. So normally I would start with the operating activities. So number one, you will have cash flow from operating activities. Okay, so this is the first thing that you have. You have a title over here, and don't forget your dollar sign. So under cash flow from operating activities, there are three items that you must have. Number one is receipts from customers. Okay. Number two, you would have payments to suppliers and employees. And receipts from customers minus payments to suppliers and employees, you will get cash generated from operations. Once you get your cash generated from operations, you have to minus out your income tax paid. So basically there are three things that you must have in operating activities. Number one is receipts from customers. Number two is payments to suppliers and employees. And number three is income tax paid. Okay, so we shall start with the first one, which is receipts from customers. When it comes to receipts from customers, you need to look at whether this question is, you need to ask yourself whether there's any accounts receivable in this question. Okay, so in this question there is accounts receivable. Okay, opening balance 6010, closing balance 5250. Okay, so once you find out that you have accounts receivable, you need to open up your accounts receivable working. Okay, accounts receivable account. So under accounts receivable, BD is 6010 and CD will be 5250. Okay, and then you need to look at the things that will affect your accounts receivable account. Accounts receivable is an asset, so the debit side will be on, your brought down figure will be on the debit side, and your carried down figure will be on your credit side. Okay, now once we have included this information, we put a tick at the side and we look at the next item. Okay, whenever we reconstruct our accounts receivable, we need to see whether the question have gave you the bad debt account or not. If the question didn't give you any bad debt, you might need to find your bad debt from allowance for doubtful debts. And if you can look at this question, there's no allowance for doubtful debt, which means maybe the bad debt will be given in your income statement. As you can see, your bad debt is over here. Bad debt 7,300. You must know that bad debts will actually reduce your accounts receivable. Okay, because whenever we have a bad debt, okay, we shall close the account and we shall not chase their debt anymore because it's unchaseable anymore. So there's no point of holding this accounts receivable with us. Hence, we need to reduce our accounts receivable. Okay, so record this in your T accounts. So bad debt will reduce account receivable by 7,300. Okay, so you will have bad debt over here, bad debt 7,300, and it will reduce my accounts receivable. Okay, now next one we shall look at sales. Sales, especially credit sales. Okay, we assume that all the sales here is credit sales. Okay, so your sales, if all this 132,000 is considered as credit sales, it will actually increase your accounts receivable. Okay, so sales will increase your accounts receivable because you have made the sales but you haven't collected from your customers. So this will actually increase your accounts receivable. So on the debit side of your accounts receivable, you have to include sales. And your sales figure will be 132,000. Okay, so it's supposed to be 132,000. Okay, just like that. Okay, once you're done, you shall look at your sales return. Okay, look at your sales return. Sales return, when I make a sales and your customers return your goods back, okay, it will actually reduce your accounts receivable because when your customers give you back the goods, they don't owe you anymore. Okay, so whenever you see the word sales return, you must know that sales return will actually reduce your accounts receivable. So under accounts receivable, on the credit side, you will have sales return and the figure will be 4,100. Okay, so your sales return will be 4,100. Now the next one we have here is discount allowed. When we give discount to our customers, okay, they owe us lesser. Hence, it will reduce your accounts receivable as well. You must know that discount allowed will actually reduce your accounts receivable because when you give discount to your customers, they owe you lesser. Okay, so discount allowed will actually reduce your discount allowed will actually reduce your accounts receivable and the figure will be 400. Okay, so altogether, hold on now, maybe I put the CD downwards a little bit. Oops. Okay, so my CD is 5250. Okay, so the total figure that we have on your debit side will be 138010. So on your credit side, you must have 138010 as well. So you need to find the balance figure, which is also known as your how much you have collected. Okay, so this bank figure here is how much you have collected from your debtors, and you need to find this figure out. So you are going to take 138,010 minus 73,000 minus 4,100 minus 400 minus 5250, and the balance will be 120,960. So take a yellow highlighter or any highlighter. Okay, I want you to highlight the word bank. This is the amount of money that we receive from our customers, 120,960. So you need to check whether if you have any other income like rental income or commission income that you receive, because these two income like rental income and commission income that you receive, you have to include this in your receipts from customers as well. Okay, so in this question there's no rental income and there's no commission income, so you don't need to put it in your statement. Okay, so basically your receipts from customers, you would have 120,960. So receipts from customers, you will have 120,960. Okay, simple as that. Now for the payments to suppliers and employees, you must know that payments to suppliers and employees includes payments to suppliers of inventory, payments to suppliers for other expenses like rental expense, insurance expense, and how much have you paid for your employees. You have to include all these three items in. Okay, all these few items in. So we will start with the first one. You need to ask yourself, how much have you paid for your inventories? Okay, so you need to look into your inventories account. If you look into your inventories account over here, okay, your inventories opening balance is 11,330, closing balance is 9,400. So under your workings, you would have, under your workings, you would have an inventory T accounts, and the opening balance will be 11,330, and the closing balance will be 9,400. Okay, it will equals to 9,400. So once you are done with this, you must look at the things that will affect your inventory account. The first thing that will affect your inventory account will be your cost of sales. Cost of sales will reduce your inventory account. It will reduce your inventory account because when you sell your inventory, okay, when you sell your inventory will become lesser. So you need to record your cost of sales into your inventory account. Okay, so cost of sales will reduce your inventory account. So it has to be on the credit side. And your cost of sales figure here is 67,200. Okay, so the next one that we are going to look at is whether your company have any purchase return. Now when you have a purchase return, like this case, okay, purchase return is 4,000 and it will reduce your accounts payable. When I have purchase return, I return back the inventory to my supplier. So my inventory will goes down by 4,000 as well. Okay, purchase return will reduce my inventory by 4,000. Okay, so purchase return will reduce my inventory by 4,000. So purchase return will reduce my inventory by 4,000. I have to record this as well. Okay, now once you record your cost of sales and purchase return, you can close this account to find out how much of inventory you have bought during this year. So on the debit side, you have 67,200 plus 4,000 plus 9,400. You will get 80,600, which means on your debit side, you will have 80,600 as well. Okay, so once you find the total figure on your debit side, you need to find the remaining balance, which is 80,600 minus 11,330, which is also equals to 69,270, which means that during that financial year, your company have bought in 69,270 worth of inventory. We can either buy this inventory on credit or by cash. So how to see whether this company bought it on credit or whether they buy this inventory by cash? Very simple. Look into your trial balance. If the questions have accounts payable, meaning that the company buy it on credit. So if you buy it on credit, okay, you need to reconstruct the accounts payable account as well. Okay. So since I bought this inventory 69,270 on credit, I have to record this in my accounts payable account. So for accounts payable, your BD figure will be on the credit side because this is a liability, and your CD figure will be on your credit side. Okay. Sorry, your BD figure will be on your credit side and your CD figure will be on the debit side. So your opening balance is 5,100, closing balance is 3780. Opening balance 5,100, closing balance 3780. Okay, and the next one, we need to record this the amount of inventory that we have bought this year, which is 69270, into your accounts payable. Okay, I bought this inventory 69270 on credit, so my accounts payable will increase by 69270 as well, because I have purchased 69270 of inventory, but I haven't paid them yet. Okay, so once you are done, you have to look at your question to see whether there is any discount received. In this question, there is one discount received, and the figure will be 740. Discount received will reduce my accounts payable, because when I receive discount from suppliers, I would pay them lesser. So my accounts payable will go down by 740. Okay, so under accounts payable, I would have discount received 740. And the next one will be my purchase return. Purchase return will actually reduce my accounts payable by 4,000, because when I return back the goods to my suppliers, I don't owe them anymore. Okay, so my accounts payable will reduce. Okay, on your debit side, you need to record there is a purchase return of 4,000. Okay, so your purchase return 4,000 is recorded. Okay, so once you are done, you can close all the accounts. You can close the accounts payable account. Okay, so 5,100 plus 69270, you will get 74370. So it's 74370, which means on the debit side, you will have 74370 as well. Lastly, find out how much have you paid to your creditors. Find out a bank figure over here. So 74370 minus 740 minus 4,000 minus 3780, you will get 65850. Okay, 65850. So this figure over here, you need to highlight it in yellow, because this is the amount that we need to record. Okay, so under payments to supplier and employees, you would have number one, inventory, and I have paid 65850 for my inventory. Okay, next you need to look at your other expenses. If you look at advertising, advertising is 3,500. You need to see whether there is any prepaid advertising or accrued advertising. If no prepaid or accrued advertising, you can straight away take this figure, 3,500. So since this question, there's no prepaid or accrued advertising, you can straight away write 3,500. Okay. So the third one will be wages. Wages 21,400. Same thing. See whether there is any accrued or prepaid wages. There's no accrued and prepaid wages in this question. So your wages figure over here, you can straight away take the figure from your income statement, 21,400. Okay. Number 4, you would have rental. Okay. Now interest has to be disclosed separately. Interest cannot be in payments to suppliers and employees, so I cannot include this first. Depreciation, there's no cash movement when it comes to depreciation. We don't record depreciation in statement of cash flow, so we can just ignore it. And lastly, rental. Okay, rental, same thing, 8,200. You have to check whether there's any prepaid rental or accrued rental. Since there's no prepaid or accrued rental, you can straight away take your 8,200 and put it over here. Rental 8,200. So the last thing that you can do is you can add up the total, and the total will be 65850 plus 3,005 plus 21,400 plus 8,200. You will get 98,950. Okay. So you're going to take the total of 98,950 and you shall put it into your statement. So payments to suppliers and employees, you had 98,950. So your cash generated from operations equals to 120,960 minus 98,950. You will get 22,010. Okay, so once you are done with this, you are halfway there. The next thing that we are going to look at is income tax paid. So income tax paid is equals to you have to look at the opening balance of income tax liability. Okay, so normally you need to reconstruct the income tax liability account, or you can straight away take the opening balance of income tax liability because it's the same. Okay, so if you want to reconstruct the income tax liability account, you would have income tax liability over here. Okay, opening balance is 8,400. Closing balance will be 7,220. Okay, find out your income tax expense. Income tax expense is from your balance sheet over here, 7,220. 7,220. So income tax expense 7,220. So your total figure here we got 15,620. So this is supposed to be 15,620 as well. And lastly, if you find your bank figure, it will be the same as your BD figure, which is 8,400. So if you take 15,620 minus 7,220, you will get 8,400 as well. So the amount that you have paid for your income tax will be equivalent to the opening balance of your income tax payable or income tax liability. Okay, so your income tax payable will be 8,400. Just write it this way. Okay, just write the 8,400 there, and then you will get your 4 marks. Okay. Now, once you are done, we have to look at other items. Okay. For example, you need to look at your interest income and dividends income, because interest received and dividends received can be either in investing or operating. So in this question, I'm going to put it in operating activities. So interest that I earned this year is 600. Same thing, look into your question and ask yourself, is there any accrued interest income or is there any unearned accrued income? Okay. You have to look at whether there's any accrued interest income or whether there's any unearned interest income. Same goes to dividends. Ask yourself whether there's any accrued dividend income or whether there is any unearned dividends income. So since this question didn't have any accrued interest income or unearned interest income, you can straight away put this figure into your operating activities. We call it as interest received. Okay, interest received. This will be $600. Interest received is $600. Okay, this figure over here. Okay, this question there is no accrued or unearned interest income, so your interest received will be 600. It's a positive figure because money coming in. Now look at the next one, dividends received. Dividends that we receive is 1,005. because there is no unearned or accrued dividends income in this question. So take 1,005 and just put it in your operating activities. So we have dividends received 1,005. Okay. So the question didn't mention whether to put your interest and dividend received into investing or operating. So you can either put it in investing or operating. It doesn't matter. So in my solutions over here, I'm going to put it in operating. Okay. So I'm done with my interest and dividends received. The next one that I'm going to look at is interest that I paid. Now, interest that I paid is 300 because there is no accrued or prepaid interest. Okay. If you look into this question, the general ledger part over here, there's no accrued interest or there's no prepaid interest. So this is the amount of interest that I've used and paid during the year. So this 300, I straight away write in your statement. You have interest paid, and my interest paid will be 300. It's a cash outflow, so I need to put a negative sign. Okay. So once I'm done, I need to sum everything to find out my net cash flow from operating activities. So my net cash flow from operating activities equals to 22010 minus 8004 plus 600 plus 1005 minus 300 equals to 15410. Okay, so this is my net cash flow from operating activities, 15410.